If you've ever been driving down Grand Avenue and you've seen that old home that looks like it's from a different century, it's because it is. That home is 110 years old this year, and that's also the office of Kim Wallinder. Kim Wallinder's been helping families get into their new homes for the past 2 decades while she's been remodeling this one. Kim, tell me, you've been born and raised in Billings, right?
Correct.
And then you went and did real estate for a while, and then you started doing lending, and you've been doing lending for 20 plus years, yeah?
Yeah, I started my own. Lou and I used to flip houses, and we built some houses. And then in 1990, I got my real estate license. So I was working for Best Realty, and then I went to Coldwell Banker, where I had my broker's license. And then back in late in 93, the guy that had been our construction lender at the bank asked me to come and work for him because he was starting a mortgage company. So that's how I ended up in this part of the business, because I was really good at the paperwork.
Oh, I see. So you did a full switch from sales, and not saying real estate doesn't handle a lot of paperwork, but moved strictly from that over to lending.
Yeah, and then in 95, he left the company, and I went out on my own. So I've been on my own since June of 1995.
Oh.
So, yeah, long time.
Quite a while, yeah? Very
Quite
good.
a while.
A lot of people walk into buying a home assuming they just call their bank. What is it that you offer that makes it a little bit different from the bank?
Well, you have banks, retail lenders, and brokers. So the banks, when you come in the morning and you're a loan originator, the bank says, okay, here's the rate, here's the cost today for this rate. You go to a retail, and we have some retails here that are actually secondary mortgage markets that have their own retail stores. There again, you're only getting their rate. Now, as a broker, we sell to several different secondary markets, and it comes down to cost of money and programs, because we do Montana Board, we do a lot of VA. Lou's was a Marine in Vietnam. So we do a lot of veterans, but you have different programs. And then you also have the snag of, if you're at the bank as opposed to us, we sell each loan individually to the secondary market. So if your debt ratio is high, but they purchase it, you're okay. If you go to the bank might say, no, your debt ratio is 49%. Our bank overlay won't let us do that. You have to be at 45. Because the banks turn around and they'll sell like 100 loans at a time. They funded them with their own money, and now they're going to sell it to PennyMac. Say they're going to sell these 100 loans to PennyMac. So they have their own overlays because they want to make sure they can resell it and get their money back. Whereas as a broker, it's already sold to Fannie or Freddie when we're done with it. And so we don't have to worry about, so we can max out, like if Fannie Mae, Freddie Mac says you can go to 50%. I've had them where it runs through their automated credit systems. I've had people at 52%.
Wow.
That got an approval. And when you think about it, and you're looking at debt ratios, if you make $3,000 or $4,000 a month, okay, your debt ratio is going to be really important. But if you're making $10,000 a month and your debt ratio is 50 for that house payment, you can probably do that.
So, Kim, I want to touch on something. You said the bank sells the loan. Am I hearing that right?
All the money on home loans comes from Fannie and Freddie and Ginnie. And so here again, they're selling the money, and money has a markup. And I always tell people it's like toothpaste. And let me look at my notes here, because I think it is really kind of astronomical difference when you look. So like if you're FHA and you're looking for no origination fee on a deal because you're short money, this lender is going to do today FHA, you pull in a 720, they're going to do 5.99%. They're going to charge you $162 for that.
Oh.
This one over here, you'll have to read that, is $2,500
Yeah.
for that same rate.
Wow. No kidding.
Each lender, it's like, do you buy your toothpaste? It all came from Crest,
Mm-hmm.
but you're buying it at Walmart or over maybe at Town and Country or Albertsons, who maybe has a bigger market.
Mm.
All the money comes from Fannie. They mark it up. The lenders mark it up, the secondary markets, how much money they want to make on each deal. And they're all different. Like, this lender loves VA.
Mm-hmm.
They will have a lower cost on VA than this lender.
Oh, I see.
This lender, and I know one of your questions here, this lender, if you lock in this rate and our market's so volatile, say 2 weeks from now before we close, you can get to 5.625 or 5.75 for the same cost. They allow you to float to that lower rate before you close.
Oh.
These guys do not.
Oh, I see. Okay, so you can pinpoint exactly what an individual needs or is looking for in their home loan.
Mm-hmm.
Whereas a bank essentially does like a cookie cutter kind of cutout for the
Right.
loan that they're looking for. And
Right.
then they take that with the requirements and then sell it to another lender. Am I picking up on all this?
Yeah, they sell it back to Fannie and Freddie to get their money in secondary markets. Because you'll see, like, you close with the bank, but now PennyMac or Mr. Cooper is servicing it. Well, they're all secondary markets,
Mm-hmm.
but the
Wow.
bank sold them in a huge block. I think the other thing about a broker is we can go through and look at your scenario, and like my underwriter with this company, I've been working with the same girl for over 20 years.
Mm-hmm.
As one of my underwriters and my account rep is from here. She lives down in Spokane, but
Yeah.
yeah, you kind of get a feel for, hey, you're a little complicated. This underwriter is going to call me and tell me, hey, if you can do this and this, we can make this deal work.
Oh, I see. So there's a lot more negotiation room when dealing.
Yeah.
I'm starting to get an idea that we're painting banks as like a bad image. Is this right? Or
Well, I think the other thing is too, which like I'll work up a worksheet
mm-hmm.
and send it to my borrowers, and they might give it to their banker. And I know once I had a gal from Wells Fargo go to them, well, I don't know what this credit is. How come you're getting a credit? Well, if you come back over here at 6 1/8, they're going to get that much of a credit back towards their closing costs.
Mm.
So they're going to get about $1,500.
Yeah, kickback.
If they're doing a $300,000 loan.
Mm.
So they're going to get close to $1,500 as a credit at closing that goes towards their appraisal, their title fees. The banks do not do that.
Mm.
And we have to disclose as brokers in the initial disclosures how much money we're making.
Oh,
So, but we have better options for pricing. I can price it where the lender pays me, and so you're coming to closing like this with less money. Or I can price it where you're paying me, and you're going to get a better rate. Like I do Montana Board, but Montana Board has a 1% origination, and then depending on the lender it's with, there again, another market.
mm-hmm. Yep.
They have fees too. So you're going to end up with more fees, but you might get 5.375. So it depends how much money you have to put into the deal. But I think the biggest mistake borrowers make is the lender just tells them, this is your rate.
Yep.
We always quote you at least 3 options.
Yeah.
So you can look at it and go, okay, I'm going to pay $3,000 more for this rate.
Mm-hmm.
But in reality, maybe you're only going to save $50 a month. is that going to be worth it? Are you going to be in the house long enough to repay yourself back that $3,000?
True.
You may not.
There's a lot of different options out here.
Mm-hmm.
And you don't just have to listen to what the bank is throwing at you.
Well, and you need to look at everybody's costs.
Mhm.
What are the costs? What are you charging me in points, origination? What are the lender's fees?
Mm-hmm.
What are my overall costs? Because your title fees, your insurance, none of those fees are changing.
Yeah.
It's all on this end.
So, Kim, let's switch gears a little bit. Let's talk about this home, the iconic Wallinder office that's on Grand Avenue.
Okay.
You know, we drive by it every single day on our way to work. Can you tell me a little bit about the story? I know it's 100, is it 110 years old
It's
now?
110 years old. If you live in a house and you want to research your house, you can go to the Montana room at the public library. And if you know the address, the Polk directories go way back to the early 1900s. And you can research by address or by name.
Mm.
So, like, when we first moved in, I didn't know much about the house. I knew it had been moved there because of structural things in the property itself. And after we moved in, one of my mom's friends, Harriet Delavue, came by, and she had grown up in that house, so she knew that it was 816 North Broadway.
Mm.
So I went right down to the Polk directory.
Yeah. Yeah.
And I'm like, okay. So 1915, the Polk shows it as vacant land.
Oh.
1916, there's a house there. So that's how I know the house was built in 1916.
Oh.
And then you can go to Clerk and Recorder. They have these huge old books with lots of paper where there again you can research names if you know the address. And I had a customer do that where we researched the names, and then she went back to the library and in all the old phone books was able to actually find people that had lived in the house that were still in Billings, still in the phone book.
No kidding. And it's
call.
all recorded on there.
Yeah, and be able to call and go, hey, I just purchased, such and such a house.
And this is public access. This is stuff that anyone can go to.
Anyone can go.
Oh.
But it's really fun to see. And then in the Polk, it tells their name. It tells what they did for a living. Delavue was an attorney, and so Lou and I were playing around in there the other day, Monday or Tuesday, and we found one of our good friends from high school, his grandfather in the Polk from 1916, and he had a shoe shine shop.
No kidding. Yeah.
And that was so cool.
Yeah.
It's like, oh my God, he had a whole shop, and all he did was shine shoes.
Yeah. Yeah. And this was in the house. This is like part of the history of the home. Is that right?
Yeah. I mean, you like back in the 80s, the women's prison had this house for their pre-release.
Wow.
And it was moved there in 1956. But when Lou and I were remodeling it, it's like, how come there's all these metal door jams?
Yeah.
We couldn't quite figure it out, And then you get the chance to research, and it's like, aha, the women's pre-release was here.
Yeah,
that explains.
That's why they were metal door
They were
jams.
locking the girls upstairs.
Yeah.
Okay.
Yeah. Talk about some history. Maybe something that you don't really want to find out, right? Yeah.
Except we still get catalogs.
Yeah.
To buy things for the prison. Yeah.
Yeah. Still coming in the mail.
Still coming in the
years
mail.
after.
And they're about this thick.
Wow. Wow. Yeah.
Yeah. Anyway.
So tell me, you did the research on the home. It was way out. It wasn't even on Grand Avenue when you had it, right?
No, it was up where the Billings Clinic Commons sits.
Mm-hmm.
That's where the house sit.
So when did you move it out?
Well, Delavue was the first one to sell out when Deaconess Hospital did their first expansion in 1956.
Mm-hmm.
So they moved it to that location in 1956. And he owned the 5 lots there. Mm-hmm. And where the billboard is, he sold out to the sign company, moved this house there. But in 1944, when my parents' friend Harriet and Ray Wise got married, Dad gave them that lot, and they built the house next door in 1944.
Oh.
So a lot of history.
Mm-hmm.
And that's why I have pictures of my friend Harriet sitting in front of the fireplace. And,
Yeah. Yeah.
so I have some cool photos, and I have cool history to go with the house. And like upstairs, you can feel in the floor where maybe walls were moved.
Oh.
And it was really nice to have Harriet come through and go, yeah, there was a wall here. There was a doorway here.
Really?
And it all kind of matched up with what I thought had been moved around.
Mm-hmm.
But,
So you went and moved it up onto Grand Avenue. And
well,
then you.
Dillaview's moved it in 1956.
Oh, right.
Lou and I bought it in 2003.
Mm-hmm.
Our attorney said we needed a name for it. We named it the Money Pit, LLP. Because it had been through a lot.
Yeah.
It had been through a lot. If you look at the pictures of before that are behind me sitting on when it was sitting on North Broadway, and then the picture of when we purchased it and to where we brought it now. I mean, and the inside, same thing.
Yeah, and Kim, you completely remodeled pretty much the whole thing and kept the original architecture in there, right?
Yeah.
Yeah. The fireplace is one thing that is definitely an eye catcher. I know you put a lot of work into that. Can you kind of tell a short story about that?
Well, when Harriet came, she brought a picture, and so I knew, when the house was built. So she said it was brown brick, and I have the picture of her standing in front of this brown brick fireplace. But evidently when the house got moved, the bricks cracked,
Mm-hmm.
and so now it had been sheetrocked over.
Oh.
And it was like, okay. And I actually had some antique tiles. They're called tube tiles from that period. And I was fortunate. I found a tile maker in Spokane that could build the field tiles. And from building houses, I'm like, yeah, I'll just tile it. I used to do a lot of tile work.
Yeah.
So I have the tools, and I was an art major in college, so
Of course.
and do the tile.
Get the
and the
creative,
ceiling in
yeah.
the dining room is also my own creation. But back in the Victorian days, that period, they would take wallpapers and cut them apart and make patterns on the ceilings.
No way.
And so I thought, well, I was a graphic arts major. I got a straight edge and a X-Acto knife. I can do that.
Right, exactly. Put it together.
I can do this.
Yeah.
But then we also spent 5 years collecting authentic light fixtures that are restored in
And
the
then you
house
put all
from
those
that
in
period.
as well. Yeah. Wow. Well, let's switch gears back over to mortgages, right?
Okay.
For someone who's interested in buying a house in Billings in the next year, what's the first call they should make?
They should call a lender and make sure that they have a full-blown pre-approval, because you can pre-qual and just put data into an online system, and it'll tell you what you're qualified for. But there's a lot of hooks to that on your length of employment, how they're going to calculate your income. A lot of those things play into it. I think you want to do a pre-approval, because the last thing you want to do is go out and look at a $450,000 house and fall in love with it, and then find out you only qualify for $325 now,
Yeah.
and you can't find anything because you still have that $450, and what that house looked like. So you're better off to find out before you go looking.
Yeah. Figure out where your
Because then
budget's
you go
at.
out and
Yeah.
you look, and it's a lot more fun. Because you go out and you go, oh, you look at ones you know you can afford. You look at ones you know you can buy. And I think it makes the experience a lot better. When I was selling real estate, I had a customer come to me, and that had happened to them. And then, of course, everything we went out and looked at, they were so disappointed.
Yeah. Yeah.
So then now it's really hard to find a house. And it's not near as much fun.
No, exactly. And especially looking at some homes that are just, once you start looking in that higher budget range and you fall in love with homes, it's so hard to go back just knowing what you could have up there, right?
Yeah. I think it's really difficult. And I think you need to know what loan program you're going to do. Because if you're going to do FHA or USDA or VA, the home has to be in pretty good shape. You can't have any peeling paint. You can't have any broken windows. You got to have all the handrails. So the house has to be in pretty good shape. If you're looking for something and you have, say, 5% down, you can go to a conventional product, and the house doesn't have to be perfect. It's got to be solid. It can be ugly.
Yeah. Yeah.
But that's easy to fix.
The bone's got to be good, but the face can
Bone's
be
got to be
peeling a little
good. But
bit.
you should know if you're going out to look and you're going to do a VA or anything insured by the government, that house has to be in pretty good shape.
Yeah.
And you need to know that. If you pull into a driveway and you see a sag in the roof, don't go inside. Just back right out.
Turn around.
Because you know that house has broken trusses.
Yep. Yeah.
And it's not going to fly. Unless the seller, the realtor can call and say, looks like you got broken trusses. Is that something they're going to consider fixing?
Mm-hmm.
Because if they're not, we're moving to the next house.
Yep. That's fair enough.
Yeah.
So you work with lots of different options available for people who are looking to get into a home, right? How does that kind of change based on the individual? Like, let's say you're walking me through the buying process and I don't want a super nice house, but I want something that is a fixer-upper, so to say. Is that something that you can help me get into through a loan?
Yeah, it depends. It depends what kind of condition. Usually I tell borrowers, please email me any addresses you're going to go look at. I will pull them up and look at them and see, yeah, that one's going to work. No, this one isn't going to work. I have one going in Rygate right now.
Oh.
Where
Yeah.
little town, very hard to find anything to buy. It is a manufactured home. Before they wrote the buy-sell, we did call the listing realtor and say, can your seller document the foundation, the one-time move? Are they going to pay $1,000 for an engineer to come and do a report on it?
Mm-hmm.
Because those are all things my borrower is going to have.
Right.
Don't drive to Rygate and show them this house if the seller can't do all of that.
And that makes perfect sense, yeah.
And that makes perfect sense. And then yesterday, I actually got the purchase agreement, and the seller has agreed to do all of that. And they lowered the price $2,000.
No way. You still got a little bit of realtor in you, don't you?
Well, it's like, but if you don't know that ahead of time, and now some poor buyer has gone and paid for a home inspection, maybe they've even paid for an appraisal. I've gotten them back where all of a sudden the bank goes, oh, this is manufactured. There's a couple VA lenders that won't do them.
Mm-hmm.
And so I've inherited them.
Yeah.
But they're like, oh, we don't do manufactured on VA. But I can.
There you go.
I have an outlet for that.
There you go.
So, but it's too bad to go through all of that, and now your closing's delayed, and you're trying to get this worked out.
Mm-hmm.
Yeah.
Perks of working with a lender. It gets you into pretty much anything, right?
And I love looking at them
Yeah.
online. And
Yeah.
I go back and I pull all my own taxes, and I research that house because I want to make sure that that's going to work for my borrower.
Mm-hmm.
And that their dollars that they have to work with are going to work.
Hey, pause right here. This is your chance to enter in for the giveaway. Code's going to pop up on your screen. Take that over to yourhomemontana.com/giveaways. Put that code in and enter in for a prize. All right, let's get back into it. There's a lot of people who are on the fence right now. Me in particular. I was curious. My mom has a very low rate. She got her house back in the past. It was like 2.5%, and I'm always waiting. Like, hey, is this rate going to drop? Is it going to hit the 2.5? Am I going to be able to get into that home at that low rate again? What do you have to say to people who are just on the fence about that, whether it be waiting or should I just jump in?
Well, I don't see our home values going down. You know, Lou and I always look back, and in 1979, we had a house built for us. That's when it took so long we decided we could do this ourselves. But we had a house built for us on Freedom out by Sandstone School. We paid $59,900. That was in 1979. And back in 2006, my son's father-in-law called me up, and he goes, "We're buying this house on Freedom." And he says, "We're paying, $400 for it." And I says, "Oh, what's the house number?"
Yeah, just out of curiosity.
And I rattled off our old number, and he goes, "No, I don't think that's it." Well, then I got the purchase agreement, and that was it.
Really?
It was the
Wow.
same house.
Talk about a huge increase in just that short amount of time.
Yeah, and do you know that it still had my son's baby curtains
No,
hanging
you're
in
joking.
the bedroom?
And they were
had-
still good.
Had circus elephants on it.
No kidding. Yeah.
It's like, but you look at it, and now that house is probably pushing 500.
Wow. So just the investment. So what I'm hearing you say is just jump in. The house is going to increase in value.
Jump in because they're not going to go down. And if interest rates go up, but prices are going up, you're not going to save anything on the payment because you're going to make that up. You're paying $6 to $7 per thousand you borrow. So if the house went up, $100,000, you're not really going to save anything.
True.
And I always tell people on the interest rates, they always think that federal fund rate is a big part of rates. It's a very small portion. You want to watch the 10-year Treasury yield. When rates were really good, the Treasury yield was between 2 and 3. Today, it's over 4.6.
Wow.
So when the Treasury yield goes down, interest rates go down.
Oh, so that's how that works.
I watch it all day long.
Yeah.
And when the yield goes down, if it goes down, a few ticks, I'll get a price improvement where the cost of this money just went down. So I always tell people, if you're watching the market, watch that because that really is going to be the big thermometer.
I see. Okay.
Yeah.
So tell me the 3 most common mistakes you see people make in this industry.
Biggest one, I think, is they collect cash.
Oh, yeah. Okay.
I have a lot of young borrowers. They will, I had a gal a few years ago that, out of every paycheck, she took $200 and took the cash home. Well, pretty soon she had $15,000.
Yeah.
She'd been saving. But because of money laundering laws, you can't walk into the title company with any cash.
What?
You cannot use cash.
Who ruined it for us?
All the drug runners. But so you can't do that, and we have to be able to track your money for over 60 days. So you got to have it on 2 bank statements, and then maybe a few days till we close.
Right.
But you have to show you had that money. And I had one a couple years ago with Montana Board where my guy was heavily invested in Robinhood. Well, Robinhood is all your, Bitcoins, digital money.
Yep.
They wouldn't even give him credit for that on
Really?
his assets because they don't. At this point in time, we cannot use Bitcoin, digital monies. You have to cash it in and put it in your account. And like my little gal that was saving all that money, she had to go back to her bank. I says, go back and get all your deposit tickets from when you deposited your paychecks. And we'll match them up with your paychecks and your deposit tickets because each deposit ticket showed her pulling cash. So we were able to add them up and go, okay, now go to the bank and deposit $15,706
Yeah. Yeah.
because that's what I've documented, and that's how much cash you can use.
Right.
But you got to put it in the bank, and we got to have a cashier's check to close it.
Interesting. So the bank has to have a full track history, essentially, of where the money was, where it came from, all because the money laundering.
Yes. And if you made a large deposit
Mm.
of cash, anything over $500, we have to document what it is.
Oh.
And if it's cash, they take it out of your available money to close. So think about it, though. People that are waitresses that get lots of tips,
Mm-hmm.
that's a problem unless they can show where, hey, every time I'm continually depositing cash. So they have an ongoing history of doing it. So you can say, oh, well, she deposits her tips or a portion of her tips.
Mm-hmm.
But yeah, we can use that to close, but we have to be able to show that history.
Right.
Yeah.
So one mistake is saving cash. Do not save cash. Keep a trail of it. Robinhood. That's another mistake. Yeah.
Yeah, Bitcoin.
Yeah.
Yeah.
Bitcoins.
Very messy.
What's the last mistake you see?
Not getting a full approval, I think.
Oh. Mm-hmm.
Like to get a full approval, we've reviewed your pay stubs. We've looked at your assets. We know if you're saving up money.
Yeah.
We know if you're getting a gift. How because we have to track the gift money too.
Mm-hmm.
So and then we've looked at your tax returns. We've looked at all that data, so we know that you're a good, solid borrower, and you can go buy this house. And you're not looking at something you can't maybe do. Or they looked online, and the payment said it was going to be $1,500,
Mm-hmm.
but they missed the part where it said 20% down.
Yeah. Yeah.
And now the payment's $2,000. They didn't realize they also have to add in taxes and insurance.
Right.
And I think insurance right now, to me, can be our biggest variable because my family's sold insurance here since the 1940s.
Mm.
And insurance companies use LexisNexis. So you give them an address, they're pulling in that address. They're looking at a 5-year history on that house. And like I have a customer that he started a fire in his kitchen, turned it in. His insurance went up $4,000 because now they assume that it's electrical and everything in the house is bad, and they've paid for your claim. But then he put the house on the market. Then he couldn't sell it because he's got this new buyer that gets a quote on the insurance, and it comes back at over $6,000 because the history of the house follows it. So, like, if you're in an area that maybe has had 3 hail claims, the insurance is going to be really high, and it's going to be really high if you have a buyer because the insurance company's looking at that house.
Oh,
if
that's
there
crazy.
was a flood,
Uh-huh.
say your basement flooded,
Mhm.
even if it wasn't necessarily your fault, the insurance companies assume it has bad plumbing, and you're going to inherit this bad plumbing,
Right.
and so they're going to charge you ahead of time for it on the premium.
Because it's tied to the house, even though it's an act of God.
Yeah.
Oh, crazy.
people-
Insurance. You can't go without it.
No.
And
And some of them now are they're neck and neck cost wise with taxes, and maybe even higher than what the taxes are right now.
Yeah,
And I think that can be a deal killer.
it really can be.
Yeah.
That is huge. Yeah, you need it. You need it. What I'm learning here is do not make a claim on anything because they're just going to twist
I
it.
don't unless you have to.
Yeah.
Absolutely have to.
Right. So, Kim, there's a lot of people who can go online and just go and get pre-approved on whatever platform that they use or whatever website, as skeptical or fishy as it may be. Make a case for why they should go and contact you.
Well, I like to sit with my customers and say, okay, we can go here, we can do this one, or we can do this option.
Mm-hmm.
Here's the money you need for each one, and let's look at the payments and which one fits you.
Mm-hmm.
Which one's going to fit your money and your goal with the house, how long are you going to live there. But I think it's so hard to do all that still electronically unless they can have the ability to print stuff out. But I think it's nice to sit and have them across from me and go, here's your insurance, taxes. If you close on the 15th, you're going to pay this many days of interest. If you close the 30th, you're only going to pay 1 or 2 days.
Oh.
So when you do your purchase agreement, do it for the end of the month because you're tight on cash.
Get someone who's going to be real with you. Yeah.
But I like sitting with people and looking at all of it because there are some really good first-time home buyer programs out there.
Yeah.
City of Billings now, and I brought their stuff in, but City of Billings now, if you fall into their income bracket, you can get up to 20% down, to your house, which is going to let you go buy a lot more property.
Right.
You know.
Right.
And in this market, a lot of buyers need that extra money.
They need something.
Yeah, they might have enough to pay, maybe $7,000 for loan costs, but they don't maybe have their down payment.
Mm-hmm.
Well, and we do Montana Board. You can go to NeighborWorks and get a loan. They have different programs. City of Billings, you don't even have to make a payment on that money.
Oh.
In the past, they've given $10,000 to $15,000. You
No
can use
way.
it for down. You can use it for closing costs.
Yeah.
There's no monthly payment.
Huh.
If you go to sell the house or refinance, you have to pay it back. But by then, you should have enough equity to cover it.
Lots of benefits out here, and it's just
Yeah, and
who
I
you talk
think
to.
it's
Yeah.
I think it's maneuvering through them.
So, Kim, for all the listeners out here, how can they get a hold of you if they need to contact you about their mortgage?
They can go to our website, just wallindermortgage.com.
Mm-hmm.
They can give me a call, and that's 406-655-4343. I'm pretty easy to find. If you Google me, you'll be able to track me down.
Yeah. Or the home, the 110-year-old home.
Or
Yeah,
stop in and take a look. Even if you like old houses, come and take a look.
Yeah, there you go. See the creative work. Well, Kim, thank you so much for being on the Your Home Billings podcast.
Well, thanks for having me.
That's a wrap on this episode of Your Home Billings. If you're looking to refinance, buy, or sell a home, now's your chance to go check out the 110-year-old home over there on Grand Avenue. That's also Kim Wallinder's office. Buy, sell, rent, and improve Your Home Billings.